Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Thursday, June 13th, the day after the CPI, after FOMC, and today we also got PPI. So I wanted to wait until today's PPI to really bring all the data together and really explain you how we are in terms of inflation, in terms of interest rates cut path, and also the economy strength. So let me just review yesterday's core inflation rate and data from yesterday, and also FOMC. We are going to review the statements from Powell, the press conference, and also the economic projections to really explain you why we are selling off today, coupled with the fact that PPI today came also lower than expected. So first, core inflation rate, basically on May, we got a decrease to 0.2 from 0.3, less than expected. And year over year, 3.4, less than the previous one and less than expected. Major hit on the right direction. In terms of general inflation, month over month at 0, coming from 0.3, and we were expecting 0.1. Year over year, 3.3, decreasing from the 3.4 and less than expected. So all these four readings were below expectations and below minimums of analysts. That's really key to understand. When we have a shock like this, the market really responds. In this case, it's positive. So that's why yesterday we ripped to the upside. We continue higher. Apart from that, the FOMC, the big decision was that we are basically flat and we hold interest rates. But the economic projections and the dot plot were showing a more hawkish projection. In this case, on the first year, we are coming from 3.9 to 4.1, so higher inflation. On the second year, we are flat, and currently we are expecting from 4.6 to 5.1. And this is a killer. This is a killer because inflation in all these projections are also pushing higher. And also the R star, the longer, means that basically the neutral rate is also increasing from 2.6 to 2.8. Let me just show you how we are managing these expectations, because on the left here we have March economic projection, and in March economic projection we were flat on the 4.6. On 2025 we were projecting higher from 3.6, and on 2026 we were projecting higher from 2.9. Now on the left we have June, and look at this. From the 4.6 on March we are spiking to 5.1 in 2024. For 2025, from 3.9 increasing to 4.1, and on 2026 we are flat. So basically, from December, we are coming from 4.6 to 5.1. In 2025, from 3.6 to 4.1. So basically, this is saying to you that the Fed doesn't even know what are going to be the inflation numbers for not even this year. They are trying to hold rates because they don't want to hike, and they are really scared about these projections because these projections are screaming higher for longer, higher inflation for longer than expected. And this is pretty damn bad. The projections are higher for longer, but the markets ran. Why? Because higher prices, higher inflation, higher prices, and economic pressure to the upside means growth. And market goal is to seek growth. That's why today on the PPI and core PPI, the PPI month over month came in the negative, minus 0.2%. We were from 0.5 expecting a decrease to 0.1, and we were in the negative. So this is a step in the right direction for inflation, and core PPI flat. Initial Jolbes claims came higher than expected and the previous one, and continued jobs claims also higher than expected and the previous one. Core PPI also decreasing. PPI general for May really lower, a little bit lower. So all these data, it's showing a cool down of the economy and a cool down of the labor market. So why are we tanking? Why are we not tanking, but we spike to the upside and then quickly reject it? Apple is selling off, it's in the negative, Amazon is selling off, Google is selling off, and Meta is selling off. Why we are selling off so badly? Because that means that growth, it's no longer to the upside. The risk is to the downside, because an economy cooling down means less money being traded, less money being circulated between consumers to producers, and less growth. So that's why we have this conundrum in which inflation is going higher, so markets are going higher because that means growth. But when inflation it's going lower and the economy is showing signs of cooling down, then the markets and the stocks go down. That's why when we go to see, let me just center this, when we talk about the inverted yield curve, we are basically where did all my charts went? Oh, I don't, okay, here it is. Sorry about that. So this is why when we have the 10-year minus the 2-year, and we are saying be careful, because when this inverts, we are going to see a recession. When these rates are going lower, because the battle to inflation means lower, that means lower growth, higher inverted yield curves, and inversion, and then the pain will come to the stock market. Okay, so now that we understood the fundamental side of things, let me just explain you why yesterday we pushed higher and we were leaving behind a lot of gaps. So today I'm still waiting for my trade. I could have traded short side up here, but I'm watching the price action in this fair value gap. But most importantly, I want the fib retracement from yesterday's price action, all this range. I want the 50% retracement and also this liquidity. So I'm going to buy long up down here at 19,433 and try to establish a deep buys even on golden pocket and the next sell side liquidity. That would mean that we are from settlement, we are 0.30 on the red and we are 0.60. But I prefer buying down there and lose my opportunity to have a deep buy than buying up here when all the PPI guys were FOMO in and they were trapped. These guys, these longs, are sad face. These are the guys that were FOMOing into because the spike to take side liquidity buy side and then the fair value gap. This was a pretty short sell setup. And since then, we've been trending lower. I don't even want to try to do a scalp. The rest of the market will tell me when it's prepared. Yields are going lower. Yields are pulling back a lot because inflation is being beaten. Yields, the 10-year is also basically selling off, and the dollar is trying to hold up somehow. Because since this was yesterday's PPI, and we are already above that level. So yesterday's move in terms of Forex, in terms of dollar index, it's gone. That's one of the concerning parts. And until I see some kind of weakness from the dollar, let me just change to the 15-minute. We are starting to see that. The first thing that I would like to see is this bullish fair value gap not being respected. And then I will try to be a bull along in the Nasdaq. Until then, coupled with the fact that Apple is in the red today, I mean, obviously it's in the red because we got a 7%. Let me just, in 2 sessions, 13%. Come on, what is this? Small caps. This is Apple. Apple. With basically 15 billion shares and 3.26 trillion of market cap. So Apple is trading like crazy, and I would like to see some kind of strength into Apple, strength into Microsoft that is basically not being able, look at this, it's not being able to just tap again all-time highs. Tesla 3.52 because Musk is I think is going to win the package of the 56 billion that is going to destroy Tesla's outlook. Amazon is in the red, Google is in the red. I mean, I'm being patient. I know I want a deep buy. I want some specific levels, and more than that, I want some kind of confirmation from other parts of the market that tell me I'm prepared. Dollar, it's still pushing. Nasdaq is now pushing, but we are still below the 45 EMA in the 5-minute and below the 200 that, look at this beautiful rejection. We are approaching there. We are approaching 575. If I miss this opportunity, okay, but I'm managing my risk today because there's been a lot of push lately. I mean, come on, guys, we need some kind of pullback. So now, you know my setup, you know my patience. How am I going to, if not today, trade tomorrow, Friday, or the upcoming week? So I would like to share with you some kind of volume key levels for me. There's another key level in here. I'm not going to chart it because I already have these lower time frames. So basically we are leaving huge gaps. This is also, look at these volumes. Big volume, and 2 points of control. Why I have 2 volume profiles here? This first one, so this first one, this one, it's, let me just, okay, this one, it's coming from the bottom. And there's another one here coming from the second pivot. So I have 2 volume profiles because I need to know when the weakness is starting. I don't want to get caught up here trying to chase 20,000 on the Nasdaq and then have a huge pullback. So I'm being pretty super cautious, and we have the point of control at 19,042, basically 19,000. 19,000 is going to be key for me. In the 4-hour time frame, we are ultra extended. Look at this. We were at 82 in the 4-hour time frame. This is not a 1 minute or 5 minute or 15 minute. This is a 4-hour time frame. So we need some kind of pullback. I want even more pullback to really buy these levels down here. Want to trade this into a push. And if not, I manage my risk, having a stop at the loss and having less losers and less amount of dollar risk. And if not, okay, I will wait patiently to better opportunities. 19,000 and this consolidation is always be there. And I think there's plenty of bulls down here waiting, big investors, swing traders willing to buy 19,000. I bet you that there will be a huge bounce down here. But I would like to take also opportunity up here. So this is the difficult part. The difficult part is to see the market trying to push and not buying because you want better prices and you want better risk management. And that's me right now. So what else I can see? Nothing else, just be patient. Tomorrow is Friday and I can see the market still pushing lower. Let's see the 1 hour. There's a lot of levels that can be hit tomorrow. So don't chase today. Don't think that the market can only go up, 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 up. Apple is showing you the way. It's showing you the way. This is the kind of setup that you need to see to really wait for a good pullback. And then down here of the 6180 or things like that, you can just burn and push the damn button to buy. But right now, I don't think I'm going to buy this. I prefer not to trade and wait for better opportunities tomorrow. And that's all from my side. I hope this video is useful for you, and this quickly recaps from the CPI yesterday, FOMC. I mean, there's a lot of news, and I would like to know if you are finding useful these kind of videos, because I plan to do this a long time. So if you find this video useful, please give them a like. Support the channel by subscribing. I upload videos like this one every single day for market forecasts, market updates, and market recaps. And also on Saturdays, I have the weekly recap in which I review everything during the week and plan the week ahead from the fundamental side of things to the technical side of things. So if you find this channel useful, please support, help me grow, and help me share with you this world that is day trading. And I analyze a lot of markets, and I do a lot of things that perhaps you may find useful. So thank you for the support, and remember that discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.